The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, early edition, and this is now 8:06. It'll be replayed at my usual time. What we're looking at is the Dow futures. Let me just do this. The Dow closed yesterday 32,482, and the Dow futures today are up. If I can get that. Yep, there it is. They are up 33 points. This is going to be very important because we made a peak C and the Chapman methodology. I'll do this in my show. I'll do it right now. In the Chapman methodology, we're always looking for a buy signal that is upgraded to a buy mode that goes to at least 4 higher peaks. We try to identify the lowest low, count each successively higher peak, alphabetize them sequentially, uppercase on the way up, lowercase on the way down. And when you get to peak A, peak B, if it gets upgraded, it should go to at least a D. We're at peak C. You can see right there. There's a chance. We're getting the unemployment, I believe, coming out in a few minutes. Let me just double check on that. What did that say? Okay, didn't see it. All right. Yeah, I think it'll be coming out in a short while. There's also a report tomorrow. But in the meantime, I'm expecting that somehow or other between today and maybe Monday, we go just above that peak right there in the Dow Daily, which is at 33,877. We go to 1 point higher. That starts leg D. And then we've got to be a little bit careful. And that's the way I'm looking at it. So being a little bit careful, a little cautious. And most importantly, I'm looking at areas for subscribers that are under the radar, that are just not in the sweep of things right now, to be able to add to our positions, because I think that we've got to be very flexible here. The normalcy of what we've had up until this moment in certain sectors where there have been good rallies and the rallies have continued, might start to stall. Looking at the S&P, I'll go to the E-mini futures here. This is the continuous contract. Now I'll go to the continuous contract trading at 41.1850. That's up $1.25. Has already made a peak D. So to see this, now I'll go to the S&P itself, since it's almost unchanged. So the S&P made that peak D yesterday. There was a one-to-one to the upside. If it's going to extend with the Dow, if that's possible here, because I'm getting, there's some hesitation, because we are at some kind of resistance point. You need to see a good close today followed through on Monday. That means there'll be futures trading tomorrow overseas. Markets overseas are open. They'll influence our markets. We'll see what happens on Monday. The QQQ 123, the QQQ NDX trading vehicle. This is the QQQ Trust Series, trading at 315.16, up 73. Made a peak D yesterday. I think there's some residual strength, but we starting to see some toppiness. Now, the technicals in all the cases in the daily charts are really good. The MACD strong, the stochastics at 93%. On balance one, it has pulled back, but the 9 is way over the 14. So it's going to really take some bad news. And the Qs would have to go to about 310 to 309 to even see that 9-period exponential moving average green start to pull back, and then to cross under the 14, you'd probably have to go even lower than that. So we're watching this very closely. IWM, the Russell 2000, been lagging a lot. Today it's up 60 cents at 174.23. Oh, look at that pattern. Not very good at all. Now, this is going to be fascinating because gold just refuses to give anything back. Remember, it was in the rectangle formation. It was a large rectangle. And it looked like it was going to make an arch formation to retest the 1950 level. Instead, what happened, it went to 1960s and bam, yesterday it had this huge move up. Overnight it held. Even now it's down just a point at 2034. and it's a leg E in the weekly chart. Look at the silver. Silver also trading right now up 0.04 at 25.08. It's made this peak E. Is this going to be a Chapman Wave instant restart? Within 3 bars, it makes a new high after peak D? Whew, I don't know. All I can say is it broke out of the weekly chart, weekly left side resistance. It's had a really strong, I can get rid of this right now because it doesn't mean anything. It's got the V-shaped pattern. I'll draw it in as a cup for the moment, just easier to see. And look at that, gone back. And so far on the week, it's closing above that left side high, which was at 24.90 back in the week of the 6th of January. Beautiful turnaround from 24 to 20, back to now to 25. Done very well. It's getting a tad overbought on the on-balance volume, but the MACD is good. Stochastic's fabulous at 94.81, so this is all very good. Hey, let's look at high-grade copper. High-grade copper is trading right now at 4.01, the continuous contract, up 0.02. It's just stuck in a lower range, and we'll talk about a lower range. Let's see what's happening to the dollar. Well, the dollar, I've got the dollar right now, the 100.82 low of the 3rd of February. Yesterday we went down to 101, what was it, 101.42, so just 80 cents away. I'm watching this closely. I think the dollar is very close to just a bounce before just some retesting of the 100 to 99 level, and that could be where gold just has a brief pullback. We're going to be watching this very closely. Now, I want you to do this USD JPY. I haven't looked at this for a couple of days, just not looked at it. It's pulled back. It held its left side support. It bounced a little bit right to the 200-period moving average, pulled back, and now it is at 131.42, up 0.09. It's just stuck in this range, in the lower range, and the EUR-USD, the euro, moving. Now, this is fascinating because the euro is not breaking out quite like gold, but it's done very well. It's in leg B to the upside. I've got a target of the left side high of the 2nd of February of 1.103. It's trading at 1.091 right now. And let me just put this in here. This is a B, and it is a buy mode because the stochastic's at 89%. The MACD is good. 9 is way over the 14. Price is over the 9 and the 14. This is definitely a leg B, and it's giving cup formation in the weekly charts. And so far, it's suggesting the euro should go higher, and that corresponds to the Dow having a bit of difficulty there. Now, I want you to do this, if you don't mind. I want you to go to the TLT, because we've discussed this for some time now. Whoops. Right there. There it is, TLT. TLT is trading at 108.33, up 0.08, just about reaching the 200-period moving average resistance of 103.51, I believe it is. If it goes even 1 penny above the 13th of March high of 109.10, goes to 109.11, that starts a breakout. That starts a new leg C. And that says this rectangle formation in the weekly chart means that it could go up to the top towards the 109s, and then we'll see if it breaks out or if it comes back inside. I think the rates are just stuck in this range for now. I'll be back in a moment. Basil Chapman, early edition. The Dow is the Dow futures are up 25. S&P futures.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, so I had a couple of questions come in and say, when do I think natural gas will start to move higher? Well, there are a couple of things going on with natural gas, and I believe that this is a little bit like, you remember oil when it went to minus 40, there was a problem, and sometimes it's just a purely technical problem, but in this particular instance, everything that I've read, which is not that much, but it's everything that I've read, is suggesting that the natural gas, you see this move up here, that was from about late February, where it went from 2.24 in the continuous contract all the way to 3.10. Well, that, remember I said that if you look at it in a chart formation, and I'm showing you now, let me show you the daily chart. I was going to say a 1 minute chart. You can see that rally. This is not what you really expect if there's a move that is an aberration of the symbol that you're looking at declining over and over, day after day after day. And then it rallies, but it doesn't spiral with a huge big candle and then another big candle. It just leaves everybody for weeks on the downside who are looking to short, just leaves it, it's gone. So it would be up in the 3.20 area. Instead, it just very steadily moved higher as if it was people who wanted to short, waited, said, let's get this a little higher before we go short. Now there's something else going on. So you need to see a really big move. You need it in days to get to almost the $3, 3.10 level. I got a caller, I believe. I'm going to go right here. Let's see. We've got John in Philly. Hi, John. How are you?
Good morning, Basil. Thank you for taking the call.
My pleasure.
Basil, I wanted to follow up on the discussion you just gave. Last segment, you reviewed TLT.
Yes.
I've observed over time that in addition to that, you do the yield charts. And Basil, I'd like to ask you specifically about the daily, weekly, and monthly charts for the 10-year Treasury yield. That would be TNX.
Okay.
Could you pull up that chart work, show us what the Chapman wave counts are on that? And most importantly, to answer the question, is in fact the 10-year yield, TNX, going into a phase here where we extend the decline in yields?
Okay, so what you've asked really is a series of questions. It's one question, but there are so many subparts to it. So let me just do this. I'm going to pull up, if I can find it right there. As I'm talking to you, I'm pulling up my triple yield chart. This is the chart that has in white, it's the 30-year TYX yield. It's the T-note, the 10-year in brown, and it's got this FVX, the 5-year cyan. And you can see the patterns that I like to look at is if you get a huge cup formation, one of my least favorite patterns, because it's very similar to a cup and it's very similar to a head and shoulders pattern or inverse head and shoulders pattern. You have to time this perfectly. Investors Business Daily, for decades and decades, it's one of the patterns I look at a lot. But you've got to time it correctly. But my instinct always has been that the trouble with the cup formation is that when it goes back to the left side high and pulls back and doesn't break out immediately, it's already used up a tremendous amount of energy as well as weakness. And then what happens is you get the cup formation, and then there could be a bounce. So the reason why I say it's one of my least favorite is that almost always the cup and handle, when it breaks to the upside, it comes back and goes back into the handle very quickly, whereas the pattern that I call the Chapman wave cup and ladle, where it just powers in leg C, it goes right through the left side high. That already says I can go to a D, I can even continue. It's a very powerful pattern. So now we're stuck in a range, and you can see it's difficult to see the brown because the brown's being covered by the cyan. This is the 5-year. But this pattern here on the yields is telling me, and now I can go back to the chart itself. I want you to see the big pattern. That's the big cup formation, breakout, and then the pullback in all of the yields. So it's not just that you're looking at the 10, you're looking at the 30, the 10, and the 5. I don't want to talk about the inversion or anything like that. That's another topic altogether. That, in fact, has a number of subtext to it. Everybody has an opinion about the inversion, but what I am going to do is I'm going to show you in the pattern, which is what you're talking about right now, what do I see in the TNX, which is trading as we speak at 32.68 minus 0.19, in other words, 3.68, and it's got the Chapman wave cup and ladle. So let me just do this here. Where did I put my charts? This is right here. Just for those people who are not used to my work, I'm going to show you a pattern right here. Oh, no, that was a mistake. I'll be there in a second. Give me a moment. I want to get the right chart. Oh, it's right in front of me. Right here. There it is. So this pattern that comes down sharply and then rallies, it only makes like a peak A or a B and then turns around. I make it red because if it takes out the left side low, it can go a lot lower. It can even double the arch formation to the downside or even more. Well, you saw there's your dreaded H. I call it a dreaded H because if it takes out the left side low, it's very negative. You've got 3 bars in which to try to get back above the base of the left side of the H. Well, it failed right there. Peak A, B minus, boom. It did a peak A, dreaded H, boom, went lower. Then it held the 200-period moving average and went to another peak A and failed. And at this moment, from yesterday to today, this is now the second day on a close below the left side low, and that left side low, let me get out of this. Did you just sneeze? I'm going to say bless you if you did. We're looking at this low that was made on the yield at, I'm going to use what's written, which is 32.95. Yesterday we closed at 32.87. So that's the first day. You've got 3 days in which to get back into that. If you get back into it and the technical start your rally, they're not rallying right now, they're very weak. It says that there should be a rally to another some visual icon, maybe the 200-period moving average, which is at 34.14 or a gap or something like that. So this is very negative in the daily because the MACD is weak, the 9-period is way under the 14, it's under the 200-period moving average, the stochastic's down at 19%, and you're getting lower lows in the weekly chart, meaning you've got trough A, you've got trough B, you've got trough C, and you've got a trough D, and now you're into a leg E to the downside. Here again, the technicals are very weak. So I'm looking at this and I'm thinking that on a purely visual basis, the simplicity of saying lower lows and lower highs gives you at least a trend. So you've got your downtrend in the daily, you've got your downtrend in the weekly. The monthly chart is doing the same thing, but the technicals in the monthly chart, funnily enough, are still very strong. So what I'm going to say to you is this. I would look to the left side to find some kind of support in the weekly chart, and there isn't any candle. There's no doji candle or a gap or something. It goes all the way down to the 24 level. This is down to 25.25, 2.5, and that was made in August the 12th of last year. So now I have to look at trend lines. So if you want to hold on a moment, I'm going to draw this in and I'll do it with you, or can you hold on?
Thanks, Basil. I'll take it off air.
Okay. All right. So John's going to be listening off air. He's in the den. I'll be back. The Dow futures are up 6 and the S&P futures are down 1.6.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back. We're looking at the TNF, the 10-year T-note yield. In other words, if the bond price goes up, correspondingly the yield goes down. If the bond prices come down, yields go up. And this is suggesting to me that there's a very important trend line we're looking at on a weekly basis right here at the 32.65, I would say 32 area to give it a little bit of room, but actually it's more, I'm going to be quite strict, 32.35. And most importantly, what I'm looking at is within the context of channels, and I love to draw these channels. I do it all the time. Trend line. Remember, channel is two parallel lines. A trend line is just a single line joining points, outer points on the bar, on the bars. So at 43.33, the high of the yields in this continuous contract, I should see if that's still the same thing because it gets changed. 33. That was way back on the October of 2022. Doesn't that feel like a lifetime away? You can see that we're making lower lows, and that's really important. We've got a Chapman wave inside track repellent zone right here, and we're testing it. My suspicion is that if I use the parallel line, that we're coming down to the 31.72, 3.172 level, and that's going to be a big test. And that kind of corresponds when I look at it. You remember I was saying to you, TLT, let me just go back to the TLT. TLT has to overcome the 200-period exponential moving average, but the weekly chart is in a rectangle formation. These rectangle formations can be quite formidable. So that corresponds to maybe a rally towards 100, and I'll give you the exact price. It'll be the high that was made on the week of the 9th of December at 109.64. And so that's the area where I expect there's some resistance. If in the next 2 weeks, I'll give it it's a weekly bar, I'm giving it a whole full 2 weeks. If there is a power move into the 111s, you can see that, yes, there's some kind of icon on the left here. You can use this gap. It's not really a gap. It's a gap in the body of the candles as a resistance area, and that takes you to the low of the body of that candle. So it opened at, it closed at 110.22. So 110.22 will be kind of the breakout. Once you get into this particular candle, that's going to be very positive. So just make it as simple as possible. I'm thinking that yields, I'd spoken to Tom O'Brien the other day when I was interviewed on Tuesday, and he said he thinks that yields are probably have made some kind of a top and they're pulling back. I'm saying I think that they are stuck in a range for now, but the technicals in both the TLT daily and the TLT weekly, not the monthly looks terrible, are suggesting that there's still internal strength, but not enough strength for me to say, oh, we're breaking to 111, which is just 2 points, about 2.5 points higher over the next 2 weeks. Not yet. So I'm in the camp that says we're still stuck in a range, but definitely when you look at the technicals on the TNX, look at this. I'll go back again. This is a powerful pattern. But remember, when you start off small in the dreaded H and then you get bigger and bigger, now you're using up both momentum to the upside and momentum to the downside. So I don't know what happened right at this particular moment. Yeah, the futures are open tomorrow, not stocks, but the futures because of the overseas trading. To debt answer in the debt. So the other thing is this: there was a report right now, and I'm going to show you this. This is where you get. Okay, so you made a peak in the 1 minute chart at about 41.23ish right there, pulls back, and then you got this big spike. So when the Fed announcement comes out, or when there's an early morning 8:30 announcement on the economic factors, joblessness, or whatever it is, you get these spikes. It's not what happens immediately; it's what happens soon afterwards. So you can see we've kind of, this is a Chapman wave inverted Roman candle. If at any point in the E-mini today, no, I shouldn't say today, it needs speed. In the next 30 minutes, if there is even a test for 2 bars of 41.16, we're at 41.11 right now, down 6.25 in the futures. There's a really good chance we'll have a quick pop to try to get to the 41.18. I'd said to subscribers this morning, I'm wondering if this is not a two-click session. In other words, this low that was made at 1 o'clock right there, the 41, right on the fib number right there, at 41, let's call it 41.06. If that pullback that we saw at 6 o'clock, Chapman wave Roman candle, closed above it a number of times, that's a really positive move. Now you've got this peak C, could be an alternate count. I should have put E/C because it never took out the starting point here. But I'm thinking there's a chance that if we can survive, I'd say to subscribe to my opening call, I do this every day. I show the Dow chart. In fact, let me show you what I do. Where's my chart? My chart is right here. There it is. So this is what I do. This is today's report. And we are long the Dow and the Dow 3 times long the Dow. And I said right here, I believe it is, yes. So the Dow closed down minus 198. Then I go on and then I say, the Dow's daily technicals are very strong at this time. Today, while there should be some give back of yesterday's slide. That means a little bit of a pop-up. Unless the Dow can hold at plus 60s or more after 2 p.m., some residual weakness might prevail, especially if minus 40s or more at that time. But there should be a rally attempts throughout the session. And then in my actual Traders Corner, that's my daily, the actual newsletter where I have all the positions that we have, follow them up every day. I said there is a chance that we have a 1-to-1 to the upside. I don't know if that's accurate or not, but I'm looking at the way we came down yesterday, and we'll see what happens. Let's see. A2B says in the den, Basil, look what I said yesterday after the close. Stage seems set for a Basil 2-click day tomorrow. Hey, Pesavento, very, very good. We could both be wrong. I'm just saying that there were enough signs to say, because I'm expecting a leg D to come in the Dow in the next couple of days, that somehow or other we should overcome the selling, because yesterday's selling was a little strange. Well, I don't know if you found it very strange, but every time we were trying to rally, the market got beaten down. But every time it got beaten down, it tried to rally. So that just said to me, there's some confusion out there. There's some residual strength, but it's becoming more and more selective. So I don't want to make this into a prognostication that just is a silly one. I want to say only if the E-mini futures can trade in the 41.28. That's 16 points from here up. And it has to do that it can't just pop there and then break down. That's what's been happening lately. It needs to get there and needs to hold for about 35, maybe 40 minutes. Then you'll start to see buying come in. If, in fact, we break underneath 41.05, that's another story altogether. 41.05 says no, not ready for prime time just yet. And let me just do this now. I can do this again. I wanted to show you, look. Remember, we were talking about those peak Ds and talking about can go to an E. But let me just run this again because I'm doing this as a weekend look at the market going into next week. The Dow's made a peak C with very strong technicals. It should go $1 higher, or pennies actually, higher than the high of the fourth, which is at 33.63472. If it goes 7.3, that starts your leg D. It doesn't say it has to go more than a penny higher, and then that's all over. It says that's all it needs to do to start your leg D. Once that D is in place, if you start to see a little groundswell of buying, especially in the Qs, the S&P has been doing pretty much the same as the Dow. But if the Qs, which have been weaker, get strength, that'll be a good sign. I'll be back in a moment.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hello, let me just check. I've got a couple of questions that have come in, and I don't want to, let me just see. Yes. So what we're looking at here, a question came in. Nordic American tanker shipping is a fantastic move from about $1.40 to the 450 area, and now it's pulled back 460. Well, I think that this 200-period moving average of 3.23, it's a 3.55. That, it looks to me, with lower lows and lower highs, this is the dreaded H, and they took it out in 3 bars. It hasn't gone back, so I think there's a chance that it might have to test the 331 to 323 area, and then I would assess it. But the way the weekly, this spike up and failure, this just suggests that if anything is going sideways, it's not a breakout to the upside. A question came in about Baba yesterday. No, it was a statement. I think GT had mentioned calls on Baba. And trading, this is Alibaba Group, this is the Chinese Amazon. They're trading at 99.24 pre-open. It's at up 69 cents. Well, look at this gap, and it's held it beautifully, and it's right on the 200-period moving average. And today it looks like it's going to try to tackle yesterday's high. No, the day before, that was on Monday. No, Tuesday's high was 101.47, so it's trying to get there. But I suspect right at this particular moment, there's just a little stalling pattern, and unless it can get to 101.50 by Monday or Tuesday, I think it could stay in this range just a little bit longer. But the MACD and stochastic have improved a lot. If the stochastic plunges quickly from 81% to 78%, I'd say be real careful, because if the price comes down with it, that's a big problem. Another, FXI. FXI is the Chinese, this is the large cap ETF. We can't pull back. I thought that the move up to the 200-period moving average was very strong, but I also thought that it was, if you look at the weekly chart, there was still a tremendous amount of weakness. So it's at 29.01 pre-market, up 0.08, but I think that the 29.66 200-period exponential moving average resistance, even though it went to a peak C, and the technicals are suggesting that it should try for a D. I think this is this pattern right here. I'm having a tough time. I'm going to do it only because it's purely on a technical basis. I've got a buy signal saying it should be in a buy mode, and it should go to a D, but I think that it's going to make more likely a C1, C2 failure. I'm a little cautious going to the next week or two. Why? Because the Dow doesn't have to get to a peak C, could get to a peak D, could get to a C1, and just underneath the previous high could make a peak C2 and pull back. But when the stochastic's flat at 95%, I mean, that's just the perfect thing. That's what you look for to sustain a move. But if that starts to fail, that's something else completely. But so far, that's what we're looking at. A question came in about, about Tesla. I said I'd look at it. I just keep looking at it and say when I thought it was going to try to make some kind of a basing formation, because I didn't like the action yesterday. I still say it's in it. Look, there's your dreaded H pattern. Goes straight up, pulls back, straight down. And yes, you arch at another peak A. but it is holding the 9 or 14 period moving average. The MACD is good. Stochastic's a little weak at 75%. I prefer it at 82%. So I'm watching it because my suspicion is that in this area here at 181 to about, 179 is what I was looking at. That's key support. If that gets taken out, that's going to be a problem. So I'm using the monthly channel as a guide. What was that? Yes. So a couple of questions came in. Could I look at EEM? EEM, I think this is for Bill. I lost my notation on EEM. I've done EEM, the daily chart, weekly, monthly chart, for years and years and years. We followed it. This is the MSCI Emerging Market ETF. Big move A, Big B, Big C in the weekly chart, and then the pullback was way too sharp. I'm suggesting that this is, someone has said to me, as we're going through some rough period, maybe in April, maybe the overseas markets will hold better. I look at that and I'm just saying, look, the stochastics at 94%, the MACD is good, the 9 is over the 14, and this is the best that the EEM could do, go from 36 to 39, 10% when the rest of the oversold areas have done so well. No, I think this is just telling us that it's almost like the FXI, although their weekly charts are a lot better. But no, not yet. I'll do a little more work over the weekend on EM. I'll come back on Monday and we'll discuss it. Another question came in. Where did it go? Where did it go? This side, that side. Which email did I get? That's right. Amazon. It made the D, and it had a sharp pullback from D. Remember this is in the Chapman methodology. We make things, if I can make it as simple as possible, just count each successively peak. A, B, C, D. I remember years ago when I was beginning here at TFNN, I was talking about this, and then I said, okay, so at D, other things can happen. But if it goes to an E, you get the instant restart, and then someone in the den said, oh my God, I just learned how to get to a D, and now he brings up an E. Well, that's the way it is. The core, the basics of the Chapman methodology is to get you from a buy signal to a D, and then other parts of the technique can be as simple as just keep counting the peaks on the upside alphabetically. When you get to G, if there's like an instant restart at D, you can say, now we can have another peak D. Anyway, as it stands right now, Amazon's pullback. If you look at the weekly chart, this is not a very strong pattern at all. Let me look at the RTH. I hope I still got the notation there, just somehow or other. Okay. Remember, this is not automated. Every single one of the thousands of charts that you see, handmade charts. So look at this RTH. This is there we go. This is the Van Eck Retail ETF. 20% is Amazon. A, B, stalls at a C on the 200 period moving average, but this is now a magnet. So the further away it pulls back, says that it becomes less of an effect to draw the price back to 164.32. But at this particular point, I still think it's acting pretty well. It is for me. I can't do this right now, but the weekly chart did the H pattern, a couple of them, and it's been very successful in that it keeps bouncing off it from that peak D. If you look at the weekly chart, the monthly chart, it's just a sideways move. So all I can say is that in April, if there is a close below 152, make it 151. A close below 151 in Amazon, that's serious for everything. That's for the whole retail sector. However, if there is a push between now, what's the 6th today? Today's the 6th. Let's give it until next Friday, all the way through until the 14th. If there is a move in Amazon through next week, maybe even intra-week, if there's a touch of the 168.35, I think, is that the one? Is that? So that's 166.76, 165.51 was the gap low of the 17th of February. And yes, if there is a move above 166.80 to 160, 8:30. Next week for Amazon, that's going to be really good, I think, all around, but not if it starts to fail. Oh, I've got one more segment to go. This is the early edition. This will be repeated at 10. By then, the market will be up and away or down and away. We'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Now, I knew I was going to forget to do it. I wanted to do it early on. I want to wish everyone celebrating the Passover, Easter, just a fantastic weekend. Just beautiful celebration. I'm looking at, a question came in, Basil, what are you looking at that has potential for the upside? Well, I like the Communications Service Select Sector Spider Fund, the XLC. We don't have it right now. We've had it before. I did like it before. I was a little concerned because so many people are cutting cable and all that, but it's actually doing quite nicely. So I do like that. I like ED, which is a Consolidated Edison. Look at this beautiful chart. We do not have this, but I like it. But it's so close to, it's at 98.51. 99 is resistance on the left side. So it's really close to resistance. But look, the Chapman falling axe and the breakout in the weekly chart so far with a day to go for the weekly chart. We'll see what happens. But almost at the highs. But there are certain sectors, I think, that are under the radar and doing very nicely. So the other question is, on the day, what will you be looking at? What I'd be looking at is this. If there is a close that holds for more than even 30 minutes, under 41.05 on the 10-minute candle, that's going to be a negative on the day. And it's going to mean there's a struggle to move to the upside. If for any reason after, I need to say mid-session, so let's just say Eastern time, if by 1:30 the Dow is actually up 60 points or more, and you start to see some kind of a groundswell in the S&P and the NASDAQ, it starts to move higher, then I think we could actually close towards the high of the day. But it is a long weekend, and that might be tough to do. It looked early. I would have preferred if there wasn't an early morning rally like yesterday, a dip. I'd rather be looking at the dip to go high for higher highs and higher lows. Now, in the meantime, the VIX index, I keep coming back to the VIX index. I think it's coming into play. I think next week VIX will become much more important. It's at 1967 right now, up 59. You want to see the VIX actually start to pull back under 19, 1920, maybe even under 19, if you're going to see any rally at all to be sustained. It won't be sustained because the VIX is holding higher. But if the VIX suddenly starts to move to 20.30 and the Dow is down more than 50 points, that could be a problem. So it's a real mixed session. I am expecting Dow to get to that leg D in the next couple of days. Have a wonderful long weekend. Stay tuned for Tommy Jr. He's doing the market kickoff, morning market kickoff, the great programming here at TFNN. Check out my opening call, my daily newsletter. Have a great weekend. I'll see you on Monday.